Good afternoon, everyone, and welcome to Tulane University. It is my pleasure to introduce our next session, Aligning Policy, Practice, and Property in Carbon Sequestration. If time allows, at the end of the session, the panel will take questions submitted by the audience. To submit a question, please scan the QR code and locate it on the screen over there. Please be sure to silence your cell phones, enjoy the conversation, and please join me in giving a warm welcome to our moderator, Monique Edwards. Thank you.
Good afternoon. Great to be here. The bios for everyone are in the materials, and I thought we would introduce everyone with a fun fact about them. To my immediate right, we have Mr. Matthew Simone. He is a shareholder with Liskow and Lewis. His fun fact is he was a duplication specialist, and for 1 hour of the day, he was a telecommunications manager for the Louisiana State Bar Association here in New Orleans. Matt.
Good afternoon, everybody.
Next to him is Mr. Michael C. Drew. He is a partner with the firm of Jones Walker. His fun fact is the day he interviewed with Jones Walker, they offered him tickets to the Saints Atlanta football game in 2006, which was the day that the Superdome reopened after Miss Katrina, and he declined.
I didn't know they were going to block the punt.
To my immediate left is Mr. Hunter Johnston. He is a partner with Steptoe in Washington, D.C., and during his time at Tulane, he spent 3 years as a vehicular placement specialist at Commander's Palace.
It's true. Best job I ever had.
And to my far left is Mr. Gray Stream, Executive Chairman, Stream Companies, and President of Gulf Coast Sequestration. He was in the Nutcracker with his daughters. He had his ear ripped off in a bull riding accident, but it got reattached. And he is the king of Washington Mardi Gras for 2026. So we're going to start off with a question to everyone on the panel. We are here at the Energy Forum in a state that has landed 2 data centers. With Louisiana attracting large-scale data centers, do you see CCS as a tool that can not only offset their carbon footprint, but also make these operations more competitive and sustainable? Great, we'll start with you.
Yes. Would you like me to elaborate?
Just a little bit.
Absolutely. It's interesting that obviously the CCS data centers are kind of critical to how the world is changing and the amount of data that has to be processed, but they are resource intensive, and their sponsors, particularly here in the state, a lot of big news about Meta. They have carbon reduction goals. It's really extremely difficult to generate the kind of energy that they need and reach those goals of having low carbon intensity in their operations. There's no other way to do it at this point besides gas-fired power with CCS, and you can essentially, create that power for them with minimal to no, carbon emissions. So obviously, there is a big push to build as much renewable for them as possible. It will address, candidly, a small fraction of what their needs are. And ultimately, in the future, perhaps nuclear becomes more, more developed. But a long lead time on that, a lot of regulatory hurdles. So absolutely.
Hunter?
Well, I come at it from a policy standpoint, and if there's going to be any success to incorporation of CCS at the Meta data center or the combined cycle gas turbines that Entergy is proposing to build, the policy is going to have to align to provide the incentives to make that investment make sense. And there's uncertainty about the policy right now. It's sort of a mixed bag about where we've come in terms of the incentives that are available for carbon capture and sequestration. I think that the Entergy contracts are for 10 years. Obviously, those plants are going to operate for a lot longer than 10 years. But they're going to build them CCS capable. But really, the question is going to be, is the policy still going to be there, and is it going to align the risks appropriately so that they can get subsidized the extra costs that come with CCS?
Matt?
I think it's imperative that CCS play a role in this. And I think to look at this, you have to look at where these data centers are in the country right now. I mean, if you look at their main focus, it's in California with a lot of tech. It's in Virginia with a lot of government contracts, obviously, as well in Texas, where you have a lot of tech coming there, too. So why is it in Louisiana? And I think the reason why Louisiana is able to even garner this type of project is because of our natural resources. That's what makes it attractive to come here. And so to continue to do that, we need to make sure that we continue to offer benefits to these companies of wanting to place these type of centers here. And so while the natural gas is close and it's relatively cheap right now, we need to make sure that while those plants are not carbon neutral, that we're able to make the state carbon neutral, and they can then have that benefit on their balance sheet as well. So I think what's attracting them now today, we need to keep on with that and making sure that Louisiana remains a unique spot, even though we're not per se in the hub of where that data is coming from.
Yeah,
Mike?
and I think the data centers present an interesting sort of proof of concept that Louisiana is uniquely situated both on the front end, being able to provide the natural resources, the energy to power one of these data centers, but also on the back end to having the geology to support the CCS. You're not going to be able to do a CCS project anywhere in the country or anywhere in the world. You need that right mix of the subsurface geology, the availability of the land to be able to do it. So I think for Louisiana being able to position itself to use what it's always been known for on the front end, being a great energy state, with this new opportunity on the back end is not just going to work in the case of the data centers, but you're going to see it across different industries. And you're seeing it now, whether it's companies looking to do low carbon fertilizer and take advantage of global markets using again, Louisiana's unique position as a hub of commerce with the Gulf and all of our many ports. You're seeing it with companies like Nucor looking to do low carbon steel to again satisfy global markets that have a different regulatory regime than we do. So the data centers sort of fit right in that model.
Okay. Hunter, you are headquartered in D.C. with a global reach, particularly with the financing from tax credits to private equity. What financial structures are proven most effective in underwriting CCS projects, and how do you see these evolving as the market matures?
Wow, that's a big question. Most of these projects are being done under the subsidy of the 45Q tax credit. The 45Q tax credit has a federal policy that is attached to it, including direct pay that a project developer can get for 5 years. Direct pay means that instead of using the tax credit to offset your tax liability, you can actually receive a check from the federal government. Now, there's some issues with respect to direct pay because there's a time lag between when you actually do the activity and file your tax return and when you can get the cash from the federal government. But that availability of direct pay is essential to these types of projects because it is very hard to pursue a tax equity financing for projects that are, take 2 or 3 years to build. And so COD is into the future, and companies that you might, or banks that are looking at a potential tax equity deal, it's too far in the future for them to cut a deal that's going to be meaningful to a project developer at FID. So direct pay, which was, by the way, threatened in the One Big Beautiful Bill, as well as transferability of tax credits. Transfer is something that was added during the IRA that allows for a project developer to essentially sell the tax credits into the market. There's no time limitation for that. So, you know, the basic 45Q deal will initially pencil out with, unless it's a big company with a lot of tax liability, a lot of development companies don't have any tax liability. That's why direct pay or transfer is so important, because they're not taxpayers, because they otherwise have depreciation and other tax benefits that doesn't put them in a tax position. So those two combined are really the things that are driving most of the project finance type of activity. Now, you know, policy certainty around those things, they were recently threatened, and you know, there's sort of a narrative out in the market that, you know, 45Q was left alone, but you know, they shot at it. They didn't blow it up, but they shot that. There was the House Ways and Means Committee actually restricted transfer to, you know, on these credits before the Senate restored it. So that uncertainty is, you know, certainly a factor in these deals. But, you know, finally, tax equity is, of course, attractive to these deals after FID because it's a better return. It's less of a discount on what you get in the market with respect to transfer. And you also can use tax equity for depreciation, that kind of thing. So that's sort of the basic model that most of these deals are pursuing.
Wonderful. Matt, you have been called a ghost whisperer when it comes to pipeline issues. What are the biggest technical, regulatory, and community challenges with CCS pipeline development, and how have you successfully navigated them?
I think right now, probably the biggest hurdle for the pipeline piece of carbon capture sequestration is that it's really in a great state of flux legislatively and regulatory. This last session, there was a great deal of change on the eminent domain piece, also some ancillary laws on that front. And it seems that it's shaping up again for another potential evaluation. And the changes there are, you know, on the landowner side versus on the industry side. And probably the way that we are currently advising the midstream piece of this is really to remain engaged and prepare yourself for these potential changes. Have plans that are nimble, that you're able to pivot in the event that the law will change, perhaps not in line with your current plan. On the technical side, really the biggest part here is that a lot of people believe in some way that because Louisiana has something along the lines of 60,000 miles of pipeline, that all those pipelines could maybe be transferred over to carbon capture. That's not the case given the chemistry of carbon dioxide being moved. Some of them are older, built differently, and not able to be approved. So that takes quite an effort to understand how they were built, when they were built, and what their capacities are. There's engineers that do that are much smarter than me that help, you know, identify those areas. And I think probably the biggest thing, though, across the board, and this is going to go for every part of carbon capture, is going to be the community development. Currently, it's not looked at by every community as being in their benefit, and there's an uphill battle to explain to people what the positive is for them, and try to educate them on something that they don't know about, and most people don't know about it because you just had the first well permit in Louisiana last week. So what's the next steps, and how do we educate people? But the important part, I think, is going to be that education, outreach, and community development. So there's a lot of issues that remain unanswered because they are still so new. But being on the forefront, I think, has to be by being engaged on every level of state and local government, as well as keeping yourself engaged with communities who are going to be touched by this in some way or another.
Okay, thank you. Mike, you deal with both state and federal environmental permitting. Are there particular challenges to permitting CCS projects from an environmental standpoint, and what are some strategies to overcome those challenges?
So, I mean, I think Matt hit on one, which is to do a CCS project, you need a well to be able to do it. And so the regulatory process for getting those wells permitted is new to the state. The state was given the authority to permit these wells in February of last year, and so between February of '24 and September of '25, there's been one permit. So that delay is something that I think everyone in the CCS space is working with. But the other challenge is it's not just one regulator or one permitting regime, it's multiple. To be able to do a CCS project, you're likely going to need approval from the federal government through the Army Corps because you're likely going to have environmental impacts that are subject to Clean Water Act jurisdiction. You may, depending on the nature of your project, need an air permit if you're also going to be an emitter as well as doing a CCS component. You may, if you're in the coastal zone, need a coastal use permit. You will need, as Matt is an expert on, you'll need permissions to build your pipelines to get the CCS from the emission source to the storage site. So there's this overlay of different regulators that all need to sort of sing from the same hymn book to be able to get these projects built. And so I think the thing that we really work on counseling anyone in this space is a realistic understanding of your timeline and a realistic understanding of sort of the front-end work to be able to get to a place where you can put shovels in the ground.
Great. As a major landowner you helped spearhead Gulf Coast sequestration. What vision or turning point led you to take this step, and how do you see it shaping the region's long-term economic and environmental future?
Well, you're right. The history of our organization, our family organization and business organization, is really built around land stewardship, and whether it's forestry or wetlands preservation, agriculture, and we are owners of. We also do try to invest and build new companies here in Louisiana, which was the genesis of GCS. And the problem that we were seeking to solve with that was ensuring that industry in our region could be competitive in a global marketplace. They were, some great projects that want to develop here, and all the great announcements, I won't say all, but most of the large announcements that have been made have had a component, a CCS component, because they want to either have low carbon power, for instance, in data centers, or a low carbon intensity product that they're creating, and that's both from a brownfield perspective, but also greenfield development, new investment, new jobs that we're trying to attract here. So and we also have invested trying to help see some of those projects move forward. So with that kind of perspective of seeing what those projects were prioritizing, and understanding that we were in a position with land holdings and with kind of a history of supporting new companies, that we could put the business together to evaluate the opportunities here to ensure that solutions existed for those companies either that want to come here and invest dollars and build our workforce, or the ones that are existing that, as we know, tend to compete in a global marketplace, and we don't want them to not have that product offering, essentially as they present that to different markets to whom it's important. So that was the motivation behind the development of GCS.
Okay. Matt, Louisiana, let's see. CCS projects are often located near communities already burdened by industry. How can these projects deliver real benefits to those communities rather than adding new concerns?
That's a great question, because these communities, they care very much about these projects. I've gone to several community hearings that DNR puts on and listened to their concerns, and they are real, they're passionate, and they need to be heard. Probably the biggest thing is reaching out to these folks and telling them what these benefits may be, and what are they going to look like for them. A lot of people are under the belief that one parish has this industry that's making jobs and creating benefits, and that the carbon might just be put on their property, and that's going to be it in their parish, and they're not going to get anything from this. I think the biggest thing has got to be that these projects need to have components that do deliver those local benefits, however creative any company needs to be in creating that, whether it's some partnership with the schools in the area to allow people to be trained to help maintain these projects, whether there's some type of partnership of a revenue. The sky's a limit in terms of how creative you can be with this. But I think that delivering real benefits to the community is step one of the outreach for this. And it's unique to carbon capture, given that there's not a product being created like you would have, say, in natural gas or other type of exploration and development. That this product is essentially the tax credit that's driving a lot of it. So what thing is being made? And it's hard to tell people what that is because it's a tax credit and not a resource being taken out that can be shared. But again, just go back to and summarize, it needs to be that the projects do bring those results to the communities and not just saying that we're going to have this well here and that's going to be all there is to it.
Mike, what is one piece of advice you would give to a company looking to develop a CCS project in Louisiana, and why?
Well, I mean, I think Matt really hit on it. It's outreach. I think one of the things that you've seen sort of in the evolution of how these projects are reviewed and regulated is this used to be a pretty sleepy space. I don't think anyone gets really excited about getting permits and public notice and public hearings, but it has become something where there's a lot more interest and a lot more focus, and I think the projects that have moved forward with some measure of success are those who are transparent, who do take on the role of being engaging and educating, helping dispel some of the concerns about safety that you hear from a lot of the local communities, and also helping them understand the benefits. I think one of the things that happened very early on as the post Infrastructure Act sort of gold rush to start these projects was an understanding of how do you get benefits from them into the communities. And you saw with Louisiana, a number of these projects were being done on state lands. And if you look at the storage agreements that were entered into for some of these projects, they provide sort of a two-tier payment structure to the state. They provide essentially a dollar per acre, some $50 an acre or some measure until the project goes into operation, and then they provide a second tier of payment based on the injection volume over time. And right away, the local parishes were saying, well, wait a minute, this is in my parish, but what is the benefit of this to me? So they actually, a couple sessions ago, passed a law that gives all local parishes 30% of that state money to invest as they see fit in sort of local initiatives. So that's a tangible benefit. This is not just a tax credit being created for a company or a disposal site for some facility, miles or parishes away. Here's actual money coming into these parishes to support it. So I think it's outreach, I think it's listening, and I think it's working to sort of address those concerns during the life cycle of the project that's going to create success.
Great. If we look 20 years ahead, what does success look like for CCS in Louisiana?
Well, it's not really just judged by the CCS, I think. I mean, I think it's judged by all that it has enabled, right, in terms of the economic growth that it's generated. So again, when you look at the projects who have basically tried to establish a competitive position and provide products to marketplaces that they otherwise wouldn't be able to provide them to, that are investing here, then that's really kind of where you ultimately get to see the greatest benefit of what it does. It's a solution that is basically, the leverage on that is all the additional investment that it's able to create. I think 20 years from now, this will just be, another thing. I mean, we've been injecting CO2 in the ground for 50 years, and without the kind of, same political and kind of public concern or outcry around it. And, that has, had an economic impact that's positive, but it hasn't really driven the kind of, industrial and large commercial kind of opportunity that we see now. So I think that's ultimately what it'll look like in 20 years. I also think that there'll be a much higher recognition from a voluntary standpoint of what the value is of this. When you look at the scale of what's being done from a carbon abatement standpoint while still getting that energy and still getting all those products. And that market, I think, will probably have gotten a lot more certainty around it in that time, because you have something that is both happening at a large scale, is verifiably permanent, and is specifically measurable. So it's really attractive from those reasons, for those reasons.
Hunter, with AI driving unprecedented energy demand and federal funding shifting away from some renewables, what policies or financing mechanisms do you see as critical to balance affordability, grid reliability, and decarbonization through CCS?
Well, look, I want to first help to answer what Gray was just asked, because success is going to be that a lot of projects are built. We get past first-of-a-kind type of projects, and the amount of CO2 that's going into sequestration begins to make a measurable difference with respect to the amount of CO2 that's being emitted. Louisiana is the highest per capita emissions state in the country. I think it's fourth overall. The ammonia production has been the biggest emitter in the state for many years. But guess what? LNG is the second biggest emitter. Cheniere is the second biggest emitter in the state now. It went from zero to being the second biggest emitter. We've got to be able to scale CCS in a way that's going to make a difference in the amount of CO2 that goes into the atmosphere. Now, policy is going to have a big part and role with that. For instance, the top priority of the Carbon Capture Coalition, which I represent in Washington, last year was, besides preservation of the credit, was to have an inflation adjustment for 45Q that meets the inflation indexing that when 45Q was rewritten and $85 became the amount for non-EOR sequestration, that inflation adjustment didn't start when the law was passed, and so therefore the $85 credit's really worth more like $69 today to projects, and inflation kills projects. We're experiencing inflation everywhere, and engineering kills projects. So our policy has to align with the realities of building projects, the cost of them, the risk associated with it. And I would also say that success in policy and in projects, what success is going to look like is going to be to have policies and availability of these sequestration sites being large enough and diverse enough so that you're not having to deal with one player, that it's more of a system of sequestration that's connected by pipelines, and so that and that we have a whole ecosystem of policies that that support this. And right now we're really talking about a mixed bag of things that have happened in Washington, especially with the One Big Beautiful Bill, because with one hand, 45Q was preserved, but 45V, which is a very important tax credit for the production of hydrogen and syngas is sort of the fundamental building blocks of the chemistry industry in Louisiana, in the world. And we saw the biggest greenfield carbon capture project in the country was in Louisiana, was Air Products. And of course, cost overruns there, and inflation has now basically, I think they're still for sale, basically, to take over that project. So You know, and at the same time, the Trump administration canceled 24 projects and over $3.7 billion worth of funding that was made available in the bipartisan infrastructure framework a few years back that some of our Louisiana senators had a lot to do with. They were just canceled. You know, and that's a real, it's a real mixed bag about where we are in terms of development of projects and where policy has to align. So we have to have all of those things, including something on the demand side. So those, you know, coming back to your question on AI, we've got to have policy that values the commodities and activities that benefit from lower carbon energy, whether it's electricity or whether we're talking about the chemical industry, which is really where we'll see more CCS. We're not going to really see it on the electricity side. We'll see more of the opportunity, the lower cost, the bigger volumes are still on the chemistry side of things.
Okay. This is a question for everyone. Many people still have concerns about safety, land use, and long-term monitoring of CCS projects. What do you see as the most effective way to build community trust, and what has not worked? Start with you, Mike.
So I think what doesn't work is trying to slip under the radar. You know, and I think you even saw things that are perfectly legal get called out because of the optics of it. Recently, there was going to be a hearing on a pipeline project related to CCS for Exxon, and it was a project that was going to be in the southwest part of the state, but the hearing was going to be in Baton Rouge. And even though that was perfectly legal, there was this sense that, oh, this is trying to slip under the radar. And so the hearing got postponed because the concern was, wait a minute, you're doing this in Baton Rouge, but all the community interest is in southwest Louisiana. So I think it's really, really, really important to, at every step of the way, keep your engagement high, not just with the local politicians, but also the stakeholders within the community. And whether it's hosting forums, whether it's going to schools, whether it's going to community events, weekend fairs, what have you, to just have a presence and be able to engage and answer questions is critically important at every step of the project.
Gray?
Well, you know, I think everybody could expect that the answer will be, you know, talk to the communities and engage with, you know, communities where projects are. You know, I live where our project is. It's on, you know, property that my family owns. And so I'm, you know, very comfortable with it personally. And it's something that we've talked about. You know, I can talk to people about it in the grocery store and at school just as much as actually going to a public meeting. But it's, you know, to your earlier question of what, to Mike, of what would you tell people looking to develop a CCS project right now in Louisiana? My recommendation would be don't. I would just, you know, wait. I would wait and let the brain damage that everyone that's trying to do it right now is suffering, you know, while folks try to, like, get through the cloud of misinformation and the regulatory confusion. Just, like, let that settle. And, you know, maybe we lose projects along the way, you know, because of that. And God bless those that have stuck with it. But it's, some of it seems like, until there's some courage around, you know, really getting behind this with, like, full-throated, you know, support of just logical thinking on, wait, we've been doing this for 50 years under a regime that is, you know, has nothing like what we're talking about doing now in terms of all the additional monitoring, all the additional requirements. Like, what somebody got like a bee in your bonnet and you got fired up about it. Wait till the bee's gone. I don't know. But so it sounds kind of negative, but it probably does express me as not, you know, I rely on folks like this, I guess, for policy advice and legal advice, and they're experts on that. I can tell you what it's like to, you know, not just be a developer and, you know, writing the checks and seeing how it's affected the amount of destruction of opportunity and economics that occurs because of, regulatory uncertainty or, people getting freaked out by someone with a pitchfork at their door. There's just got to be some courage at some point that people have to like stick up for each other and like kind of tell somebody like, hey, we're going to listen to everybody, but at some point, sir, ma'am, you need to sit down because like we're behind it. We appreciate what's going on. And obviously it's, maybe that sounds like sour grapes, and it's always on the shoulders of the developer to do their job of trying to build that kind of consensus. But there is true, it's already happened, and more of it will happen. True value destruction, true opportunity for prosperity and development that is already being stymied. And so, hopefully this stuff will, and it will, like the 20-year vision, it's happening, it will happen. It's just, inflation kills projects, and when things get delayed, when your run rate is a big dollar figure every month and the bar moves, and so there's another month and another big dollar figure, people just say, you know what, we're for sale now, we're out. And probably nobody's lined up to buy that. I'm not saying that particular project, but that type of opportunity. So yes, do your work, do your community development. I just, folks that understand the economic implications and the opportunity that it creates, need to get out there and speak up about it.
Honor.
Yeah, I agree with everything that's been said, of course. But I would add to it that this is really about U.S. economic competitiveness. If we don't do this, we're going to be put as a country in a less competitive position vis-a-vis the rest of the world. China is the biggest investor in renewable energy. They're also the biggest, they have the most coal capacity in the world. But right here in Louisiana, we're already producing these commodities that are valuable to the rest of the world. And we can either do it in a way that is unabated from an emission standpoint, or we can do it in a way where not only do you get CO2 emission reductions, but you get co-benefits from particulate emissions when you do CCS projects. The co-benefits of CCS in terms of environmental protection are enormous. And this is all well documented, and if you want to talk about it, I can lead you to some resources to look at it. So Louisiana has the geology, it has the feedstock of natural gas, and it already has these chemical facilities that are producing these chemicals that are needed to fund economic growth. And CCS is part of that. And yes, I agree that project developers have to do a better job on the local scale to make sure that communities understand that it's not just trash, somebody else's trash that they're sticking into the ground. But they have to understand that there's jobs and economic progress that's associated with that. And that is a message that is understood on a bipartisan basis in Washington. That's how we passed the 45Q tax credit in 2018 when it was revamped. Both liberal Democrats and conservative Republicans came together to associate themselves with this policy because they could see that this was in the economic interest of the country. And we need to do a better job of selling that in Louisiana.
Matt, you get to have the last word.
And I'll be brief, as I know we're coming to time here, but I think I agree with everything that the panelists said. And let me just give an example of what maybe not to do. And that is, don't rely on just legal help or one piece. You need to assemble an experienced team of multidisciplinary areas to be able to lead you through projects like these. A lawyer can look on a document and say, legally, you can do that. Well, legally, you can do that's not always the right answer. You need to get some people who actually know what's going on a political standpoint, government affairs, engineering, really a broad team of folks to help out to get these projects off the ground.
Are there any questions from the audience? Okay. Well, thank you all for your time. This has been a lively discussion, and it's been my pleasure to serve as your moderator.
Thanks, Monique.
Thank you, Monique.
Thank you, ma'am.
Thank you all for joining this session. Our next session in this space will be Energy Systems Planning and Resilience, which is scheduled to start in 10 minutes.